We welcome you back, and we know that there's been a lot of constructive discussion held during the breakout sessions. This is the FinTech for Financial Inclusion plenary session, and our panelists are already seated on stage. We've got the Deputy Governor for the Bank of Ghana here, Mrs. Elsie Awadzi. Of course, our first Deputy Governor from the Bank of Russia, Olga Skorobogotova. We've got the Professor of Finance from the Hong Kong University, Dr. Douglas Anna, and Smita Agarwal from the Omidyar Network India, the Director Investments. And we also have, ladies and gentlemen, the Head of Communications from Tinkoff Bank, Daria Ermolina, who's joining us today. Our theme setter, of course, we welcome Dr. Daniel Shadlowski, the Associate of David Rockefeller Center for Latin American Studies at Harvard University. And our moderator for this session, I hand over now to the Executive Director of AFI, Mr. Norbert Mamba. Let's give them a round of applause.
Let me start by apologizing. You excuse my voice. The technology somehow set in, so being a FinTech for financial inclusion, I don't know what happened, but we'll see how things go. Let me start by alarming you a bit. Between 2015 and 2025, the number of Internet of Things has grown drastically and is projected to grow even much further. For instance, you had 15 billion Internet of Things in 2015. By 2025, this is projected to grow to 75 billion. These are things that are connected to the Internet, and even your refrigerators today are connected to the Internet, and we don't even know whether the much cherished mobile phone will be the instrument of the day in 2025. Things are changing. Then in the last 8 years alone, between 2010 and 2017, we see a total of 1.1 billion adults across the globe being included into the formal financial system. Currently, 3.8 billion people, or 69% of the adults across the formal hold the formal account. This, we can say, is remarkable progress. But again, we also see that 4 billion internet users across the world are currently rather logged on to the internet. And then a quarter of a billion users came online for the first time in 2017 alone. Africa has the fastest growth rate. When you turn to mobile users, again we see a huge figure there. 5.1 billion people with 8.4 mobile connections. What is this telling us? What is the story? I think the story seems to be that digital technology is transforming our personal relationships, the way we do business, the fundamentals of finance and the economics, and our everyday way of life. Having said that, AFI has in the past year or two been working on a research project on FinTech for financial inclusion, and we'll hear as we proceed the outcomes of this particular area. The panel has been for me to say that
FinTech and how to digest it. Now, I want to start out with just a little piece of news that's relevant, but that we shouldn't get distracted by. Bitcoin has fallen in the last couple of days. This one? I see. There you go. The technology has some failings sometimes. I thought I could speak loud enough, but not loud enough for this large room. So as I was just about to say, Bitcoin has fallen in the last few days. It just seems to have broken 6,300. Ethereum has fallen 6% yesterday. But we shouldn't think that Ethereum and Bitcoin are what FinTech is about. In many ways, these are a distraction. And certainly a distraction for our main concern, which is financial inclusion. That's what we're dealing with, and we ought to be very clear that that's the objective of AFI, and that's what concerns us as regulators and industry and citizens, for that matter. Because after all, finance is a function, is a service activity, and the service is to the individual and to the citizens. So you should never lose track of this main point as to what it is that we're about. Now, the second thing that's important to realize is that the instrument that we're using is indeed a technological instrument. And that's why we're calling it FinTech, financial technology. What is it? It's a little instrument that, we all carry around in our pockets or somewhere, which is a cell phone. The cell phone is a remarkable instrument. If you think about it, the power of the cell phone. Look, the cell phone has flattened mountains. In the case of my country, Peru, we used to have a whole Andes chain, 3 of them as a matter of fact. Now, thanks to the cell phone, it's flattened. They're no longer there. I don't know what's happened in the Himalayas, but I suspect the Himalayas have flattened somewhat too, because now you can get through the Himalayas by simply using the cell phone. Now, when there's a desert disappears. It's not that it's been irrigated, but the cell phone penetrates it. Jungles too. So can you imagine? Who would have thought a little piece of electronics like this would have the power of transforming geography? Now, why? How does it do this? Because it connects. Connectivity is the essence of modernity. If we're not connected, we cannot interact. So this cell phone makes us connected. It eliminates barriers. But for connection and finance via the connection to function well, several things need to happen. It's not enough for one thing to happen. And Doug Arner is going to tell us what these things are, and he will systematize for us how this comes about. The important thing that I want to underline is that as in so many things about the world and about human action, one thing to happen isn't enough. You need to have a confluence of several things. Sometimes we can list them. Now, there may be a variety of things that need to happen. For instance, when I wanted to come from the hotel to this meeting hall, a number of things need to happen. For instance, the elevator needed to work. If the elevator would not have worked, I couldn't have gotten here. There needed to be a means of transportation. Without that, I wouldn't have been able to get here. If the elevator would have worked, no transportation, I couldn't have gotten here. So sometimes you need to have 5 or 6 or 8 things happen, and there can be substitutes, of course. So that means that we don't necessarily have to have exactly the same way. I could have gotten here by bicycle, for instance. Would have taken a little longer, but I would have gotten here, at least if I knew how to ride a bike, and I used to know how to ride a bike. So there are a number of things that have to happen. One thing that we can say needs to happen is there needs to be a regulation, a framework which provides permission for the technology to be applied. That's essential. So we're all regulators, and that's what we do. We make it permissible. Each jurisdiction in its own way. Second thing that has to happen is there needs to be technological means. Now, both these things happen. Technological means are there because there's a cell phone. But of course, there are different kinds of cell phones. Fortunately, dumb cell phones work as well. They don't all have to be smartphones. Dumb phones are okay. You just have to use slightly different technology. But a dumb phone can connect very well. Used to be all phones were dumb phones at one point. Now, at some point, all the phones are going to be smartphones. Maybe even smartphones. There'll be super smartphones. Who knows what it's going to look like 5 years from now? Maybe we'll all be connected in our brains with the phones. In any case, we need regulation. We need to have technical means. But those things we've pretty much done, even though, of course, there's still things that can be improved. But then we need adoption. Now, this is much harder because humans, we're resistant. We like to do things the way we've always done them. So for us to adopt something new, that's the real challenge. Now, cell phone banking or cell phone transactions has been most easily accepted has been P2P, person to person. You know, the mother that sends the money to their child, you know, the father sends to the son, whatever. Person to person has worked pretty well. There are a number of good examples. Again, it's not generalized everywhere, but we know how to do that. Government to person is much more difficult. There are some countries, including my own, where anybody who gets a conditioned transfer payment automatically gets open a bank account. So that's easy enough to do too. In principle, you do it by decree. The President of the Republic or the Prime Minister says, thou shalt generate a bank deposit, and it's going to be in the cell phone, and lo and behold. Now, as all of you know, because you're all experienced folks, giving an order doesn't mean it gets executed necessarily. Enough orders get given where then nothing happens. The Prime Minister says this will happen, but then by the time it gets implemented, he's no longer in office, and then it gets forgotten. So it's not so clear that this is simple, but in principle, you can do it. Ooh. Now, the moderator is saying too long, too much, eh? We gotta finish. I'll be finished. I just have 2 more messages, and I'll be finished, sir. I'll be right there. Now, what's much harder is people to business. There's a big challenge. How do we make it possible for somebody walking into a corner grocery store or a small shop somewhere in the backwoods and to buy a Coca-Cola or an Inca Cola? In the case of Peru, it's an Inca Cola, not a Coca-Cola, you know, or maybe some other beverage, or maybe a beer, and able to pay it with his cell phone. That's a big challenge. It's not easy. Now, that functions almost nowhere. Almost nowhere. China is an exception, total outlier. Everything functioned in China. I'm not quite sure why, but China is a different story. But in other countries, it doesn't happen. Now, it happens a bit in Paraguay. It happens a bit in Kenya or Tanzania, apparently. In my country, Peru, it doesn't happen. Almost impossible. But there is a big challenge because until it's possible to buy the simple products, or cooking oil, soap, detergent, and beer, and pay it with a cell phone, the cell money won't be money. Money is only useful if you can use it to pay for something. And that's the big challenge. And we as regulators have really not yet bitten the bullet. So the big task is going to be, how do we make it possible? How do we help to actually complete the circle? The ecosystem won't be complete until it's possible for the normal citizen to go in and buy something with his cell phone and pay with his cell phone. Now requires a whole channel, the whole chain of distribution to work. And so that's difficult. It involves business to business, not just people to business. Now, one last thought, and that affects inclusion very significantly. When we succeed, and we will succeed, in making it possible for people to buy things with and pay for their cell phone, the cost of transaction, the cost of merchandising will go down, because at each level of trade, from wholesale, from producer to wholesale to retail to small retail, it'll all go down. The consequence will be geographic inclusion and distributional inclusion. It will be possible to get further penetrate into the backwoods. When you penetrate into the backwoods, you reach more poor people and reach more faraway people. And that means inclusion. That's the fundamentals of inclusion as you disseminate the modernity and penetrate every time deeper. So, technology indeed is the answer, but technology alone won't do it. It requires human action, it requires a proper regulation, and it requires the vision to move the regulation forward so that we provide the regulatory and rules infrastructure that allows the real side of the economy finally to catch up with the finance. We have put the finance and rules in place. We have not yet come to grips with the real side of the economy. That's a task that's going to face us in AFI in the next couple of years until we can come back and say, ha, we finally have done it. Ladies and gentlemen, thank you very much. This is my message.
Thank you, Danielle, for that very invigorating theme setting. Two things seem to come out of there, which is an interesting continent. To P2P, we seem to be doing well in as far as reverting to technology is concerned. B2P or G2P, not too well, and we need to make a lot of effort there. And that's where things really happen. But from what you're also saying, there is also a counter, and at this point, let me first come to the counter. Somebody said that if there's one thing that can prevent the Internet of Things from transforming the way we live and work, it will be a breakdown in security. Just that one thing can reverse the trend. I'll divert a bit. I was going to call upon Dr. Douglas Anna, but Danielle raised the environment, the regulatory environment, a permissive environment that is required to be able to get fintechs on the run to deliver financial services. At this point, I would like to introduce Mrs. Olga Skrobogatova, if I got it right, who is the first deputy governor at the Central Bank of Russia. She's particularly significant, as she is responsible for settlements, information technologies, and also the development of the payment system at the Bank of Russia. My question to you would be, what is the regulatory environment? What has Russia done in the fintech space? And how do you see CBR going forward?
Спасибо за вопрос.
Thank you for a question. Probably I have a few slides to comment. I'll answer a question and give a few additional comments as a follow-up to Daniel's speech. Dear colleagues, do you read me? So, in fact, I wanted to give a short report on where we in Russia are in terms of fintech progress, what are the projects we're working on. Daniel has drawn our attention to the main framework within which almost every country works. Each country has its advantages, has its own roadmap, its own action plan, but essentially the main areas that have been mentioned by Daniel, developing fast payments, biometric certification, P2P lending, and security, which underlies the development of technology. This is important in all countries, and this important international cooperation. These have established themselves as the key areas of development. And speaking of the internet, please have a look at the figures. Figures speak for themselves. Historically, the US and the EU have been historically very good internet penetration at around 90-95%. Russia had a bit of a later start, but we are very active. We have invested a lot into the internet infrastructure and created conditions for the development of the internet. And right now, our goal is to reach the figures of 85-90% internet penetration in Latin America and Africa. They started a bit later, but as far as I know from my colleagues, Right now, a lot is invested into internet penetration because that's the basis upon which all financial digital services are provided. And if we speak about the internet penetration at the level of smartphones or phones, we can see the same tendency for continents. Well, the proportions are roughly the same, and this depends a lot on the infrastructure development. China is not on the slide, but has an almost 100% coverage, just like Northern Europe. Well, it's thanks to the internet and implementing new technology on the internet. It allowed to create very fast, without expanding banking structure, to make digital banking infrastructure, healthcare, and other public services accessible digitally. So Daniel has shown his smartphone. We all have a smartphone, don't we? And I should say I was shocked a bit because literally last week, I encountered a situation when my purse with 2 my phones and 3 tablets was away from me for 30 minutes. For 10 minutes, I was a perfectly happy person. I was having digital detox. That's trendy, I heard. People, well, I had this detox for 10 minutes. At 15th minute, I was very nervous. At 25 minutes, I was trying to do anything to get my purse, anything. And this shows that, well, we may speak about our addictions, but I don't think of it in terms of being an addiction. I think of it as a convenience, as a facility that helps us solve our problems without any further ado, without any difficulties that we had to face earlier when we wanted to get these services in everyday life. Now, let's talk about the projects that we're implementing in Russia today. The representatives of our government, Mr. Akimov, has talked about digital economy, about the key areas of our digital economy, and development of the financial infrastructure is a part of the digital economy too. And we have mentioned the key projects in which we have advanced a lot and where we have very real results, or we're expecting results. Remote identification, which we launched last year, is based upon one single platform that features information about the biometrics of our citizens. This is a national level platform. Well, why we wanted to do it part of national infrastructure instead of like just several commercial organizations' commercial infrastructure is because we thought about it in terms of security, of protecting this infrastructure. For us, it was key that this platform, which the government is designing and creating and developing, only this kind of infrastructure can guarantee the security of processing data on this platform. It works the following way. Well, you just have to come to bank office once. Then your voice, your face are registered in the platform. Then you can do it via smartphone. You can address any bank, any new bank, like literally any bank in Russia. And upon this request, using your ID and password, you can be identified via this biometrical platform and then get the service or product to you at another bank. We hope that this system will work for the insurance companies, and we believe that it will be effective for public services as well. We've talked a lot about payments. It's true, P2P starts with payments, and well, then it's about lending. And I think we should not only recognize, we should understand very well in terms of regulations. We should have a clear understanding of how we're going to regulate these new kinds of transactions, because our paradigms of the credit institution, of institution and the client, now it's clients and client, legal entity and the client. It's not just about banks. And whether we like it or not, we have to pay really a lot of attention to the creating a new legal framework for these kind of relations. Distributed ledgers as one of the technologies. We are launching 3 pilots here, the Q3 this year. we are going to test these technologies together with market participants, electronic mortgages, letters of credit, and guarantees. This is where distributed ledgers have shown their efficiency, and we believe we decided to either adapt the existing platforms or tweaking them, to adapting them, or using the existing solutions. Well, 5, maybe 7 years ago, people Terraform, a conference, were talking about blockchain, how was going to replace like everything, and in 3 years we're going to work on the blockchain. No, the time has proven this wrong. It's just one of the technologies, but it's not universal. It can't replace everything, so we should be very sober about it, and we should only use it in the areas where it really gives some value for the clients, for the government, for the commercial organizations. A financial marketplace is another solution on which we work together with market participants. We believe that there should be several marketplaces in our country. There are no limits on this, because any client should have choice when picking a service, a product. There should be a wide range to be provided by the banks, by the pension funds, and then the client themselves should compare those and make a digital request and get the product they need. And that's true. Daniel has also touched upon this. My colleagues have touched upon this. All of these platforms, all these projects shouldn't be viewed separately. Technically, they all somewhat complement each other. In some cases, they are interconnected. You can't launch financial marketplace if you don't have remote identification. At some point, you'll need a KYC stage. You won't be able to develop fast payments unless you have a remote identification platform. At the same time, financial marketplace is nicely complemented by fast payment system, because once you have remotely picked the product you subscribe to, you need to pay for it or get a payment, depends on the kind of operation. And another element which we consider very important, we called it our strategic project C. This is a digital identification, digital profile. This means that we want a consent of a citizen or client, and we value consent a lot. So we need, for each client, we have an option either for the customer themselves or to provide some power to a certain organization to have information on what the transactions have been conducted by the client, what are the deposits, what ensures about the security to assurances, the payments for public services. Creating this kind of digital profile will allow for further on avoiding providing too much paperwork, which is still a thing in Russia in quite many areas. Based on this digital profile of a person, and then to provide products or services easily, or to enter or find some data to provide this to the client based on this kind of digital entry of a very wide range. And we also believe that digital platform for digital profiles will be created at a national level, and this will be a national infrastructure project, since the issue of security and protecting data on this platform is as critical as for remote identification platform. So, dear colleagues, okay, let's move on to the next slide. Great. So, financial technology itself is amazing, but only provided that they fit into the existing legal frameworks. Generally, they don't, because they change the process, they disrupt the relationships between the market participants, they bring new risks which we should mitigate. Therefore, the regulation issue is always as important as maybe it should even proceed and implementing new technology. So therefore, one of the key aspects for the central bank, on which we are very proactive when cooperating with the government and the market participants, is the issue of amending the existing regulations.
Right now we have developed several draft laws, which are dedicated to new terms and new relations that the digital economy creates. It will also have the notions concerning consumer protection and information security. With this, a lot of technology and ideas is very hard to assess from the computer or when you heard of them. You need to test it from start to end in order to create regulation that will help and facilitate the implementation. That's why last year Bank of Russia launched a sandbox, which allows us to test all the ideas and initiatives of the financial market before we introduce changes to the regulation. Right now we have 40 requests in our portfolio. Some of them are being tested already. And I must say that both the market and us, we see a lot of benefit of it. It's not a matter of taking measure right away in case the regulator doesn't understand something in some transaction or a process. It's a matter of interaction of regulator and participant in order to understand how this new service and process will work. And based on the results of consideration and piloting of new technologies and projects, we make conclusions in terms of the applicability of this technology for citizens, and together with the market participants and other regulators, maybe even the Ministry of Connectivity or Defense, we are working on a roadmap that will accumulate all the changes that we need. Singapore has a good experience, as well as England. We've studied it for a long time before beginning the sandbox of ourselves. We took a lot of moments from the colleagues from these countries in order to use them in our practice. But I must say one thing. Analysis of some of ideas and sandbox show that very often what is brought by initiators is so raw and not ready for the consumer that the second role of sandbox is also to help the initiator to finish this product and make it affordable for the client. I think that next year, when we will be discussing within the Alliance such initiatives, we will share the specific examples, but I advise all the regulators to organize work like this. It has a lot of benefits in order to understand and develop legislation for the services for client. If we talk about the results of remote identification and the platform launch, right now we have launched 400 offices in 81 regions of the country. In a year and a half, all the banks must ensure they have the biometrics processing and provide remote services via biometrics. And for banks, and not only for them, it's very interesting to be able to expand their services using all the remote channels for all clients. And in 18 months, we think we will finish the process and move on to state services and market players. And also remote identification is aimed for us to consider and implement new technologies like biometrics that have proved efficient. I'll repeat. Right now, as biometrics, we take dynamic voice and face. We also think about adding it up as an iris of an eye. We are thinking about the third element, but it should be convenient. Apart from being cheap and safe, it should be it shouldn't bring any trouble for the consumer, because if it's difficult, it won't be used. So there are a lot of elements that we need: the convenience, the cheap, the price. And so within this platform, we've developed this technology. We are launching it, and we'll be able to provide you such information. My colleagues from Financial Inclusion within the working group, they decided to discuss it actively to share the results. And fast payments, as I said, we are considering all payments, not only P2P. It's also to pay to business and from business to client. We think it's a wide infrastructural platform that should be diverse in terms of services, and it also should be safe and cheap uh, and convenient for the client. I've shared main initiatives and projects that the Bank of Russia is implementing with the government. Those are the key projects that I would like to present to you today. Considering the time, the more detailed discussion of such a project will be moved to working groups created within the regional initiative, which I welcome, and I think it should have been done within AFI for a long time ago. And I would like to say the following. My colleagues, and as I said this morning, financial inclusion is turning into a real measurement of our work. And this measurement is also measured by us as citizens. We are not just regulators, organizations, and legal bodies. We are also the people that will say whether we've managed or not. And I think that we will manage. We have all the possibilities for it and good organizational work. And I really hope that we will cooperate with all countries. And thanks to AFI, we'll reach the results that we want a lot faster. Thank you very much.
Thank you very much, Deputy Governor, for that in-depth presentation on the ecosystem in Russia. Right, Dr. Anna, you've been working on a report with AFI on the role that FinTech generally plays. You seem to have come up with some significant pillars that have to be taken into account if you are to have a proper ecosystem. Maybe as you also tackle that question, I think we heard from Deputy Governor here that the issue of user interface is extremely important. And there are schools of thought out there that argue that if the user interface is not properly taken into account, we probably run the risk of alienating those who may not be that technology savvy out of access, particularly on the FinTech stage. I'll give you the floor to share the findings of your report.
Thanks very much, Norbert. And I think the report will soon be available. For me, it's a great honor to be here with AFI today. I've been working on issues of financial sector development, financial stability for some 25 years, and I think the developments that we're seeing in the areas of technology today are amongst the most exciting things that I've seen. If we look around the world, and I think many of the themes in the report have been drawn out already across this conference. Basically, we began with this question of FinTech, and what we see with technology is that technology is changing every aspect of financial services, from developed markets to an explosion of FinTech startups with new approaches, to developing countries and emerging markets and the emergence of major technology companies. What is different this time? What is different is exactly what Daniel said. Two things. It is really the speed of change, the technology, and also, as we've seen across today, the new entrants, new players, and this makes for a big challenge. You know, a theme that we've looked at across the events this week is this idea of progress. And certainly, since the establishment of AFI, we have seen over 1 billion people join the financial system for the first time. And I think looking at those stories, looking at some of the leading experiences in Kenya, in Tanzania, in China, in India, and I think Russia also provides a fantastic example of a similar sort of approach. We can draw some lessons. And the sorts of lessons we see are that really it's not about the individual pieces, it is about building an ecosystem that all together combines to form the infrastructure for not only a digital financial system, but digital economic transformation. And this is something that we see around the world. If you just do one piece, this piece, that piece, often it doesn't work that well. You really need to build, as we saw with the Russian example, a series of interconnected pieces. And we'll see this in another example from India's stack. What are those 4 pieces? Basically, it is about digital identification. It is about simplified account opening and eKYC systems. That is your base entry. The second level is about usability. Usability is about an open electronic payment system that allows people to use those accounts. But even just having those 2 pieces, digital identity and an electronic payment system, is often not enough. What you need, as we've discussed repeatedly today, are means to make these useful to people. And where we've seen the most dramatic increases is when you combine these 2 pieces with programs of government provision of services. Being able to use these infrastructures to actually change the way that people interact with money. And one of the key examples is moving beyond just government transfer payments to other sorts of government services, to things like utility payments. And it's on the basis of this combination of 3 pillars that we can then see, as Daniel was suggesting, an expansion, a usability to new forms of commerce, new forms of financial transactions. And we're seeing this in Kenya, we're seeing this in China, we're seeing this in India, we're seeing this in Russia. And for us, this is an incredibly exciting development. And it's something that, from the standpoint of an organization like AFI, looking at these experiences are tremendously useful for other countries figuring out how to design their own strategy for building ecosystems of FinTech, not only to support financial inclusion, but also wider digital transformation. But, as you've pointed out, Norbert, this raises very much its own challenges. And some of the biggest ones we're seeing is this process of digitization brings with it new risks, cybersecurity risks in particular. But it also ranges major policy issues about use of data. How do we want to deal with data? And it also raises issues about reaching that last mile. How do we reach the 30% of that 1.7 billion who are unbanked that don't have access to a mobile phone yet? How do we reach the group who are illiterate, who are in areas without services? And this is an area where I think that the combination of the infrastructure combined with design of the government payment strategies is core. Where does all of this leave us? Big risks of a digital divide. A digital divide not only in individual countries, which individual countries with attention can make efforts to deal with, as we've seen in China certainly, and as we're seeing in Russia. But we're also potentially seeing a digital divide between countries which are able to develop strategies and technologies to leverage this to build new financial systems, new economies, and those which cannot. And I think looking forward, that is going to be one of our biggest challenges.
Thank you very much. That's intriguing, I think, in terms of the direction. At this point, I am aware that Deputy Governor, you may be chasing after the plane, or the plane chasing after you. So please feel free whenever you're excused. If you, at any point. If you can stay on.
No,
better.
I have to go now, and thank you for this panel, thank you for this discussion. I would like to tell that really it's not even not so interesting. It's interesting what we discussed, but really it's the future that we are creating. And thank you everybody for this participation. Thank you for this attention, and please, all my wishes for all our best in future, and I hope that next year we will see again. I don't know in which country, but I hope that the atmosphere and the result will be perfect like we have now. Thank you very much.
Right. Dr. Anna raises a number of points in terms of the ideal ecosystems to facilitate fintech. So we're talking about digital ID, eKYC, open and interoperable payment system, access to transaction accounts, usage of diverse financial services. I think turning to Deputy Governor Awadzi from Ghana, you are already working on biometric ID, which maybe opens the world to a lot of things, but we know that there are also cultural issues. We've heard about the issue of data. It's not that people are scared, but they want to be private. The level of intrusion, I see my colleagues at the office when I'm walking around, you know, the cameras on their computers, they've put a sellotape or something that obstructs the camera. Then I ask them why. They say it can be switched on even remotely. So, what makes you not sleep as a regulator?
Hello, good evening, everyone. And I'd like to say thank you to AFI and the Central Bank of Russia for having me here. Unlike Daniel, this is my first AFI Global Policy Forum. So I'm new to this, but I like to think of myself as being old to the movement, the financial inclusion movement. It's been my passion all my working life in different forms. So here I am today, and I'm going to share with you a little bit about what the Bank of Ghana has done. Norbert, there's a lot that keeps me up at night, but you don't want to hear it all here. So let's stick with financial inclusion. I'm going to share a little bit about the Ghanaian landscape, and I'm going to also talk about the Bank of Ghana's role as regulator, and then think a little bit about next steps for getting there. So in terms of financial inclusion, Ghana has always had a vision to integrate financial inclusion as part of the development process, as part of our efforts to grow to an emerging market, high-income economy in an all-inclusive manner. As far back as the 1980s, late 70s, 80s, the central bank and the government promoted a number of rural and community banks in the remotest parts of the country, particularly in farming areas where farmers had no access to financial services. Fast forward to the 1990s, thereabouts, where savings and loans and leasing companies were promoted by the central bank through regulation to cater for small businesses and others who were not previously accessing financial services. And then in the middle 2000s, the central bank began to regulate microfinance institutions. We have probably more than 500 of those right now, in addition to another 100 rural and community banks, another close to 100 savings and loans and finance houses and leasing companies, and then your universal banks. But the policy stance on financial inclusion right now is to work more rapidly towards a goal of achieving about 75% financial inclusion by 2023. I have to say that the latest FinTech report found that we were at about 58%, and that in the last 3.5 years, this has increased from 41% thanks to mobile money accounts. And so that's really been the key driver more recently. Mobile money accounts are currently numbering about 30 million. Our population is about 30 million too. So this seems to be saying that it's one person, even babies, right, per mobile money account. But it's not unusual for individuals to have more than one phones. And so you might have people with 2 or 3 different mobile money accounts. So that's something to keep in mind when you read that number. But these mobile money accounts are not just used for payments. They're used for credit. They're used for now insurance, micro-insurance products and services. They're used to receive remittances. They're used for investments and a whole lot of other things. So this is a picture of our landscape right now. You have a number of strategic alliances among banks and other deposit-taking institutions, telcos, fintechs, and money market agents, bank agents, aggregators, and the like. So it's a very, very complex web of relationships that deliver financial services to the bottom of the pyramid. We're seeing a lot of innovative financial services and products rising on the back of fintechs. So like I said, you're seeing not only payment services, but you're seeing a whole range of other services. But let me go quickly to the role of the Bank of Ghana as regulator. Our regulatory stance has been that we would enable the participation of telcos, fintechs, mobile money agents, and the like in the payment system and in the financial space through partnerships with traditional banks and other deposit-taking institutions. So while we allow telcos and fintechs to participate, to drive financial inclusion more rapidly, we currently permit them to do that through partnerships with banks so that the banks come up with services and products that we approve, but that ride on the back of technology that are provided by fintechs and also the mobile money operators. I must say that our regulatory framework isn't finished yet. It's still very much in progress, but it is getting there. It is making great progress, and on the next slide, I'll show a few of the things we're doing. But I have to say, more importantly, that the difficulty in designing the regulatory framework is that one is having to balance a number of objectives, some of which are sometimes conflicting, if you will, in the immediate term. For example, we still need to ensure that these financial institutions that partner with fintechs are safe and sound, and that the deposits that sit with them, underlying all of the mobile money transactions, are deposits sitting in a bank account, in some trust account. We need to make sure that the institutions holding them are safe and sound. And sometimes when you have to close a bank or a microfinance institution because they're insolvent, you have to think of the ripple effect on financial inclusion, for example. And so you're always having to do this balancing act. We obviously want to ensure that our financial system is secure from cyber attacks and other risks, is stable and has integrity. And at the same time ensuring that we're broadening access to a number of different players and broadening access to the people who matter most at the bottom of the pyramid. And so in terms of regulation, we issued our branchless banking guidelines in 2008. That's still very much in force. It allows banks to partner with a number of agents, and we have several hundreds of such agents right now operating in Ghana. We issued guidelines on electronic money a couple of years ago, and that's also helping in the space. We have a big piece of legislation just approved by Cabinet. It's called the Payment Systems and Services Bill. This would enable us to regulate fintechs and other intermediaries more directly and allow them to innovate and provide services without necessarily having to partner with banks. We have cybersecurity regulations in place. We have consumer protection regulations in place, and we do have a consumer protection complaints mechanism, which allows end users to lodge complaints directly with us, and then we investigate and punish whoever needs to be punished, if necessary, or at least seek redress for them. Additionally, we do have an online portal that allows us real-time visibility on mobile money transactions, and so we can track volumes, we can track values, and we can see who's doing what in that space. That's proving to be a very helpful tool for us. Let me touch briefly on the role of infrastructure. The Bank of Ghana, in addition to being a regulator, has also itself invested in key infrastructure that makes mobile money possible and other forms of fintech-driven services and products possible. Bank of Ghana launched a company called the GIPS, the Ghana Interbank Payment Systems Company, back in 2008. It originally was set up to provide payments platforms. It then very quickly became the automated clearing and settlement house for check clearing and other settlement services. And then more recently, in May this year, it launched the mobile money interoperability framework. And that is an expensive enterprise, but it turns out to be very necessary if this is going to go anywhere. As a result—
Maybe you can quickly wind up for us?
Right up. Let me just say that a number of transactions, the impact of this infrastructure has been felt almost immediately, with several more transactions being recorded. And the important thing is that it creates an opportunity for a common platform that all players in the space can innovate from and can connect with. It allows mobile-to-mobile payments. It allows transfers from mobile wallets to bank accounts and vice versa. So very quickly, what are the next steps going forward? There are data management issues. We get the data. We still have to get to a point of disaggregating the data to really understand who's benefiting from all of these innovative services, and we're working on that. We're improving our dialogue with different stakeholders, including the FinTech Chamber, and with other regulators and policymakers. Within the central bank itself, we're working more hard on making sure that financial inclusion as a goal is seen in a holistic manner, and not only as a payments issue or as a credit issue or as a banking issue, but then it's in the way we regulate the entire industry, we're more coordinated. And last but not least, we're working very closely on ensuring that we're improving our capacity to regulate and supervise in a way that's most effective for everyone. We're expecting the government's biometric national ID initiative to come on stream. I have my Ghana card. It's going to be called the Ghana card. It's biometric driven with fingerprints and the iris of individuals. And we're hoping that in the next few years, when everyone has gotten their Ghana card, it is going to be a game changer in the way we connect to each other in the financial system. And that's it for now. Thank you.
Thank you very much. Thank you very much. Right, my next two panelists are players, so to say, and enablers within the FinTech space. Ms. Smita Agawa is with Obsidian Network. As you know, Obsidian Network is so focused on facilitating the development of FinTech. She is particularly leads the strategy and investments team of the Obsidian Network in India. And we've heard India had remarkable changes in the last few years, particularly with the systems like the ADA system and so forth. What is it that has led to these very dramatic change? And also, as a result of that, we hear that it has quite impacted the FinTech's numbers as well in terms of inclusiveness. Smita.
Thank you, AFI, for this opportunity, and it's really heartening to see the financial inclusion narrative transition from microfinance to FinTech for inclusion. Can we have the presentation up, please? Okay. Thank you. So let me start, there's a lot of conversation that has happened thus far on digital ID, and I'll dwell a little bit more on how digital ID actually can form the foundation of the digital financial services and inclusion movement. And as we all know, digital ID is not new to the world anymore. A large number of countries have an electronic ID system. Almost 3/4 of them use it based on biometrics. I think what distinguishes between countries is the number of use cases for which it is used. The authentication based on digital ID is where we see still a varying degree of implementation and use cases across countries. What we have, the most foundational use case for a digital ID program is really twofold: the authentication, that is identify who you are, and the eKYC for new account opening, and authentication for doing transactions. I think on top of this, it's possible to then layer a whole range of use cases which can be for financial services for sure, but also across sectors for health, for education, for food security, and this whole comprehensive approach can then actually result into an inclusion beyond what would have been possible through the analog and the paper-based mode. And doing now a deep dive into, there's been a lot of reference this morning to India, and let's just go a little bit deeper on understanding what India has done and how. Since its inception, India has now enrolled 90% of its population, which is 1.2 billion people, into the Aadhaar program. I think the big contributors for this widespread coverage has been twofold. They had a wide funnel of existing IDs that qualified for the enrollment. And then second, very importantly, a very high number of use cases have been developed that actually give the right motivation to enroll and to use. The India stack, as we all know, is popularly known, is really, a a range of tools that have actually been created on top of the basic foundation provided by Aadhaar. Aadhaar provides the presence-less layer, as we call it. On top of that, we have the paperless layer that has been created. eKYC, e-sign, and digital locker. These are three tools that are actually live and very actively being used. eKYC authentications in the last year have actually more than doubled. 138 million eKYC verifications annually. In the last year, 50% of new SIM card enrollments were done using eKYC. E-sign is essentially a digital signature tool which is linked to Aadhaar. It allows you to authenticate using your biometrics or an OTP and offer a paperless signature or in lieu of a wet signature, and it has a legal backing. E-sign again has been picking up very significantly. The last 1 million e-signatures were done in just 15 days. So the volumes that we are seeing is a reflection of the relevance of these services to the citizens and to the consumers. Digital locker is another paperless tool which actually allows consumers to upload documents, e-sign them, and share them in a secure and prompt manner. Moving on, the next layer is really the cashless layer. And what you see, a number of acronyms there, IMPS, AEPS. These are all open payment systems that allow for one-to-one and one-to-many bulk payments to happen linked to Aadhaar. The digital transaction volumes using all of these payment systems have been growing exponentially in India. What that has actually done most dramatically is that the entire cost of payments is actually changing dramatically. You don't need a card anymore. You don't need a POS infrastructure. So a lot of those, the AEPS is an Aadhaar-based micro ATM program that has been rolled out, which means in order to withdraw cash, you do not need to roll out expensive ATMs. Through the use of a biometric dongle, which is installed at every mom and pop retail grocery store in the remote rural areas, you can actually withdraw cash against that using just your thumbprint or your iris recognition. And finally, on the top is the last layer that is in progress and very soon should be in place, is the consent layer, is the entire consent framework which allows for privacy rules and privacy framework for the exchange of data. Unlike the developed countries, in countries like India, for a large segment of the population, data is the only currency that the citizens have, and we do not want to curb the use of data, but what is important is that the consumers should have control over the data, and the consumers should be able to consent and regulate what their data is being used for. And the entire consent layer that is being planned is keeping in mind actually on how the consumers themselves can control the data to their benefit. Let's now link this over to how this has been helping in financial inclusion more specifically. The FinTech's results were discussed this morning, and Dorothy mentioned that the gender gap in India has actually come down quite significantly from 20% 3 years ago to 6%. There have been more number of women accounts that have been opened under the 300 million of PMJDY, and one big reason is prior to Aadhaar being rolled out, fewer women found themselves to have the eligible KYC documents to open a bank account, and Aadhaar has actually helped them in opening and qualifying for the KYC things. Aadhaar enabled G2P payments directly, ensure that the payments are going into the bank accounts of individuals. It, of course, reduces leakages for the government, but the flip side is that the research shows that there is a higher propensity for usage of accounts where there is G2P direct benefit transfers being credited into the account. The micro ATMs we spoke about. The other big thing that has actually happened because of this is what I would call as the mainstreaming of financial inclusion. The cost structure has changed dramatically, and therefore it now makes a lot more business sense to offer low-ticket products to people in the remote areas and to be able to create new business models for financial inclusion, and we are seeing a lot of private sector innovation building on top of that. I think for all of this to work, on a sustained basis, there is a lot of supporting ecosystem that needs to be put in place. Reliability in terms of uptime. We talked about privacy, agency over data, and of course, enabling regulation, to allow the innovation to flourish and thrive. And finally, but not the least, is consumer protection. As you introduce new technology, there are newer risks that consumers are exposed to, and it's important to actually address them proactively. I'd just like to conclude by saying that one of the big reasons why India has been able to do what it has thus far, and I would say it's still a journey, we are nowhere there yet, there is still a lot to do, would be one, making it a public policy priority, taking a comprehensive approach, and having a proactive engagement with the private sector to build on top of the digital rails being laid out by the regulator and the government. Thank you.
Thank you very much, Smita. Right. Last but by no means the least, this is the juicy part, in case you thought it was not going to happen. 7 million accounts, but there's no bank branch. 1 million applications per day. 60% of the staff is technology based. Ladies and gentlemen, we give a big round of applause to Emolina, who is the head of communication at Tinkoff, one of the biggest online providers of financial services with 7 million accounts across Russia. Big round of applause for our last panelist. How do you just manage to do it?
Thank you, Norbert, for giving me the floor, and thank you for having me. It's a pleasure to speak in front of such a diverse audience today. This is my first forum with AFI, so glad to be here. I'll try to keep it really quick and concise, and I guess I'm here because we are the largest purely online bank in the world by a number of customers. We serve, as Norbert just mentioned, 7 million customers without a single branch. This is when we speak about standalone online banks. So I'm going to show you a couple of slides and explain what challenges we had when we were launching a company and what projects we have to keep to help us promote financial inclusion across Russia. So first of all, about Tinkoff. We launched back in 2006. So our founder, Oleg Tinkoff, had this idea to launch a purely online bank. We commissioned a really expensive feasibility study to BCG with a question whether this model is actually feasible in Russia. And the research showed that the model is feasible, but the only question was how to do that, because Russia is so huge. We have 11 time zones, and without a single branch, like the question is you have how to deliver your products to customers. And the central bank, Olga Skorobogatova mentioned all these initiatives today, and we're a part of the major ones. But back then, central banks, and still, yes, it still requires the physical KYC to deliver the product to a customer. So the know-how that we did, we launched the Smart Courier Network, which covers the whole country and which ensures next-day delivery of our products pretty much across the whole country. So we have 2,500 smart couriers in all the regions across the whole country that deliver our products. We call them smart couriers because they're literally smart. They're not just couriers that simply deliver the products and say goodbye. They are trained professionals who can explain how the product works, who can give our customers a proper consultation on financial services. They can help them install a mobile app and show how it actually works. So how our onboarding works. A customer can apply to have a Tinkoff product either online by downloading our app. We have a space in our app when you're not necessarily a customer, you can just apply for a product. And then we call you back. We set up a meeting with you. And then, usually the next day, but depending on the region, it's in the framework of 3 days. We deliver a product at any convenient place or time. So when we started, a lot of people were skeptical about this model. They were like, you know, people still like the branches. They still like to queue, especially in Russia. It's used to be a tradition. They really like face-to-face contact. But honestly, once you start using something online, you are never, ever going back to a branch. Like my mom is 59 years old, and I was like, Mom, you should really start using Tinkoff because it's so convenient. Everything is so user-friendly. And she was like, yeah, but I mean, it's so convenient. I have my salary in one of the banks, and the ATM is so close, and the branch is so close. But once you actually get over this psychological barrier, you are never going back to the branch. I haven't been to a banking branch, I think, in like 5 or 4 years or something like that. So our customers, our smart couriers do approximately 20,000 deliveries per day. And by default, it's a funny fact, not by design, we are actually the largest logistics company in Russia. We are even larger than DHL. And this really shows how when business is trying to find ways to bring something to customers, they really come up with an amazing tool to do that, which really benefits the customers, and they don't really have to go anywhere and to stand in a queue. So some more stuff about Tinkoff. So as Norbert mentioned, we are more of an IT company with a banking license. 60% of our staff are IT people, developers, analysts. So basically our major product is our mobile app. We still have a web interface because some people still like to use web, but we're mobile first, and in a couple of years, I think we'll be just mobile only. So I'm gonna go to the next slide and then go back to the previous one. So what we're building a customer-centric ecosystem. What it means. So how we look at it, people have 2 types of spending, positive spending and negative spending. Negative spending is something that you must pay. You must pay your bills, you must buy food, you must pay for your transport, all of that. And we try to make it as automatic as possible. So we say you can set auto payments in your mobile app for all the transactions you must do. And you just know that a certain amount of money goes from your account every month or every week. And then there is positive spending. Positive spending is something value-added. It's something that gives you additional emotions. It's something that you like to spend your money to. You like to book your travels. You like to think about ways to entertain yourself, to book a restaurant, book a theater ticket, cinema ticket, and all that. So we also aim to include all the services inside of a mobile app. Just to be clear, as part of the Tinkoff mobile app, you can do absolutely everything. So we have all the daily banking services. We have services for small and medium businesses. There's an additional app for that. You can invest using our app, so it's Tinkoff Investment as part of that. So you can buy securities just using your debit card. We have this really short money bridge, so you don't have to go to a broker, study these contracts, which no normal person, unless you're a trader, can understand. And you can just invest or buy Apple or Google or any company. You can get a mortgage using our app. Well, with mortgages, you actually have to go to a branch because we don't have our mortgages. We use the partner banks for that. but it's just one visit to the bank. You apply online, you go through all the process online, and then when the mortgage is approved, you just go to the bank, sign a contract, that's it. If you ever took a mortgage, you know that you could spend up to, I don't know, you have to get a holiday to get a mortgage usually. With Tinkoff app, it's just one click away pretty much. Next slide. Oh, no, we'll stay here. And we're also developing a mobile app ecosystem around that. So we have a major Tinkoff app, and we also have a series of mono apps. So you are not required to be our customer, but you can still use our services. And this is how we also bring you into our ecosystem. So we have mobile apps for traffic fines, where you can just check whether you have any fines or not. You can connect your banking card of any bank. It can be Tinkoff, it can be other bank, and you can pay your fines. We have an app which is called Go Abroad. According to Russian law, if you own a certain amount of money, you might not be let to go outside to go traveling. So before traveling, it's better to check whether you have any debt. So we have an app for that. We have a My Pocket app, which keeps all your documents, password, and stuff like that. So yeah, and we also have a space in our app which you can use for C2C money transfers. So you don't have to be our customer too, but you still can use the service. And one more project which we are really proud of. I want to touch upon.
Quickly.
I'll round it up. So since we are purely online, there are two major channels of how we service our customers. It's online, and it's a call center. So we have a high volume call center. Just to illustrate, we don't have an IVR. So if you call a call center, a person will actually answer you right away. You don't have to listen to all that, press 1 for this, press 2 for that, and stuff like that. So when we were scaling up our business, we were thinking of how to maximize our call center volumes. And we came up with this plan to launch a cloud-based call center. So we didn't need to have an office. We just decided that any person who will have a proper training, they can work at any convenient time, at any convenient place for us. So any Russian-speaking person, obviously, because we only work in Russia yet, can enroll for that. So you apply for a training, which is developed and provided by Tinkoff, and then you can join and work for our call center at any convenient time, any convenient place for you. So it's pay as you go, you choose your time slots, and it turned out to be a great social project because we have over 16,000 operators working right now at any single moment. And a lot of these people, they are actually excluded from a conventional workforce. What I mean to say is that, again, Russia is huge, and in some places, distant or scarcely populated places, you don't really have a lot of places to work for, or otherwise you have to travel several hours a day sometimes to your office. And we provide the opportunity for these people to work. And we have a lot of disabled people who are working at our call center, and also people on mothers on maternity leave who can have several hours a day, but they can still work and they can still earn a decent amount of money. And just to round it up, Tinkoff was recognized as the best bank for disabled people. Well, when you're online, it's easier for you to be the best because obviously since nobody needs to go anywhere, all your services are online. But we are working closely with the Central Bank of Russia to improve our services. So for example, we use speech technologies to read out the interface for blind people, or if your vision is affected, you have an opportunity to enlarge certain parts of the interface or text. So we're continuously improving our services to make it more accessible to everybody, not just the general public.
Thank you very much.
Thank you very
much, Dan. So, it's here after all. That's a direct challenge to the brick and mortar, 100% digital, which is amazing work there. So, ladies and gentlemen, we've run out of time, and at this point, I just wish to summarize. I think between the private sector, between the investors in the name of media who are helping harness this technology, also our very able professor, we see that 4 pillars seem to evolve around this. First, it's the issue of the digital ID and the need for one to have eKYC, which facilitates quick and efficient entry in terms of the conducting of diligence. The second point, which seems to be coming out, is the issue of open and interoperable payment systems. If you have isolated systems, they tend to stand in the way of scale. The third is the need to access transaction accounts, and we see from the case of the last presenter who is from Timpoff, that the access to transaction accounts with added on values, which includes the courier business that you run, which can deliver services, is absolutely key in order to enhance usage. Then also there's the need of the usage of diverse financial services. But that said, we always have to remember that according to IT governance, by 27th June of this year, there are 145 million leaks, record leaks, data leaks in the world. That remains still a challenge. So within all this ecosystem, we have to build our resilience against cyber attacks. Ladies and gentlemen, join me in thanking the panel for that very deep insight into technology. Thank you very much.
Ladies and gentlemen, also a round of applause for our moderator, Mr. Norbert Mumba. Let's give him a round of applause. At this point, I'd like to excuse our panelists, our moderator, and our theme setter from the stage. I know it's been a long day, ladies and gentlemen, but there's a wealth of information, a wealth of knowledge and skills, best practices that are being shared today, and I think that's what we're all here for, to be able to absorb that information, take it back and use it to the best with regards to the various institutions that we represent. So, ladies and gentlemen, we still have a final plenary session to get through before we conclude our program for today. And our final plenary session is the Financial Inclusion Landscape of Innovation. And at this point, I'd like to welcome or introduce our next set of panelists coming up on stage, ladies and gentlemen. I want to remind you all, especially so now, to please make sure to complete the evaluation on the app. We really would like to get some feedback from you with regards to the presentations, the speakers, the topics, and what we can do better with regards to the next GPF. Our next set of panelists, I'd like to invite the CEO of Sacco Society's Regulatory Authority of Kenya, Mr. John Mwaka, to come up on stage. Our next panelist is the Director, Financial Market Strategy Department, Bank of Russia, Mr. Vladimir Tomoshnikov, Mr. Chen Lei-Ming, the Senior Vice President of Ant Financial, and Mr. James Wainaina, the Group Head of Access and Sales of Lechigo Group, ladies and gentlemen. Let's give them a round of applause. We also have the Chair of the Financial Regulatory Commission of Mongolia, Dr. Navasaran Sodnom Daja. And our moderator for this session, I'd like to hand over this part of the program to Dr. Stefan Stashen, CGAP. Ladies and gentlemen, thank you so much for your attention and your patience. Please give a nice round of applause for our moderator and our panelists. Thank you.
Yes, good afternoon, everybody. I'm really impressed how many of you are still here. Let me make a suggestion. We first have dinner, and then we all reconvene afterwards and have the final plenary. More seriously, this is a very distinguished panel, and I hope we will have the time to at least let everybody share their experience. And we try to be brief. I don't know, we might even have some questions from the plenary if we get through our program very quickly. We have one theme setter, and I will introduce while we go along. So we have Dr. Sodnom Daja Davasuran, and I would like to ask her to start with a few introductory words as a theme setter on our topic of financial inclusion landscape of innovation. And what is special about this panel is that we have representation from both from regulators' side, and it's a really nice mix. So we have regulators from the banking industry, from non-banks and microfinance sector, which is the case in Mongolia, and also from the SACCO, from the Savings and Credit Cooperative Societies sector in Kenya. And then we have industry representatives from China. So we will hear about Ant Financial, and I'm sure they don't need introduction. And we also will hear from Letsego, which is a microlender in Africa, active in many African markets, and we'll hear more about that. So I hope what the focus of this can be, because we have many sessions which are also kind of dealing with innovation, which is not surprising, innovation, inclusion, and impact. But here what we have is the intersection between regulation and providers, and how these two have been interacting with each other, and what the experience is coming out of that. So let me introduce and ask Dr. Davasuran to go to the to start with the introductory words and the theme setting. Thank you very much.
Good evening, everyone, and it is my honor to present financial inclusion and innovation with AFI's 10th anniversary in Sochi. Actually, financial inclusion and innovation, it is a really important task for promoting economic growth and reducing income inequality. It is possible to reach inclusive growth by accomplishing both economic growth and income inequality objectives simultaneously. Back in 1950s, economist Schumpeter's theory on economic development says that innovation spurs economic development and produce positive outcomes in the market that lead to reduction in poverty and income inequality. Actually, his hypothesis confirmed by the empirical research. There is a positive correlation between countries' financial market development and its innovation. Then half century later, Ross Levine also conducted economic research on financial market contribute to the economic development. And innovation is the link that connects financial market and economic growth. But now we can smell it. FinTech companies and products and services are emerging in the financial market. It has been rapidly increased. It has reached that 38.9 billion US dollars worldwide in the first half of the 2018, according to the KPMG. As a result of the innovation products in IT industry, new financial products and added financial access is expanded, costs are reduced, as well as efficiency increased. Innovation can bring progress to lives, and it's accessible to poor who are not being served by financial market. If it is there, we call it inclusive innovation. Inclusive innovation actually, there are many factors like affordable access, it to serve the lower income group, and sustainability, it rely on the market mechanism without continued government support. Also quality goods and services and livelihoods, it providing high quality at a low price requires introducing new products rather than adapting existing ones. Also, access to the excluded population, like they can benefit to the poor, disabled, migrants and women, also ethnic minorities. Again, the significant outreach of the portion of the population stands to the benefit from inclusive insurance. Of course, we all know, we all discussed introduction of mobile phones, internet services to people who live in remote areas and not access to formal financial services. It provides opportunity for them for help, education, banking, financial services, which are the basic necessities for the development. Okay, recently a number of innovations and technology based on financial products and services are introduced in financial sector of Mongolia. One of the non-bank financial institutions, which is called Mobi Finance, they provide electronic payment and remittance services. As a result of the first half of the 2018, the number of users reached that 75.7% of Mongolian population aged between 18 and 65. Another non-bank financial institutions, I'm not referring commercial institutions, commercial banks, I'm referring to non-bank financial institutions, which is called LendMN. They provide micro credit services to mobile users through phone application. Actually, they launched these products just 1.5 years ago. First half of the 2018, total outstanding loan of these non-bank financial institutions increased by 20 times compared with the same period of the previous year, 20 times. Also, Financial Regulatory Commission of Mongolia conducted survey on gender gap in inclusive insurance in Mongolia. Thank you for the AFI to make it possible. The survey was conducted using a total of 7 groups of questionnaire taken from randomly selected 1,600 adults. From the result of the survey, Mongolia stands in the same level among the developed countries according to the financial inclusion. The study shows that 94.5% of Mongolians are somehow included in formal financial services like commercial banks, non-bank financial institutions, 7 and credit cooperatives. According to the survey, there is no gender gap in financial inclusion in Mongolia, which is 94.5% of male and 94.3% of females get services from formal financial institutions. There is only 0.42, the differences. Under the survey, we estimated the largest model to understand which factors affect the probability of access to adults to financial services. The result of the estimation shows that the correlation is statistically significant for age, income, education, transfers, and employment to have active bank accounts. If higher level of income and education, also employment increase the probability of getting financial services, while the old age is decreased and reduced the probability. It is interesting to note that the probability of getting the financial services of young people in Mongolia is higher. Indicators such as gender, marital status, and geographical location don't affect the probability of adults to have a bank account. Access to bank branch and ATMs varies considerably depending on type of housing and geographical location where person live in. People who live in northern Mongolia spend the highest cost and time to get the bank branch office, while people in capital cities spend the lowest cost and shortest time to get a bank service. However, findings of the survey say that there is not much difference between urban and rural citizens' usage of mobile and internet banking services. Also, there is no difference usage of mobile and internet banking by gender in Mongolia. It is still the same, around 60%. We all know, certainly it seems there is direct relationship between financial innovation and financial inclusion. On the one hand, the innovation in financial market makes the progress of inclusive finance with reduction of cost and substantial increase in efficiency. On the other hand, the inclusive finance triggers the process of innovation development. Financial innovation helps to achieve sustainable development goals by increasing financial inclusion, as is started by the CGAP. The first, eliminating extreme poverty, because digital payments have improved delivery of government anti-poverty programs by ensuring funds reach their intended recipients. Secondly, reducing hunger and promoting food security. Digital financial providers that don't require travel to a bank branch have a special benefit for farmers who live in remote areas that are poorly served by traditional banks. Thirdly, achieving good health and well-being. Through digital financial services, people benefit from health insurance, also accumulate savings for health expenses in their mobile wallet. Fourthly, quality of education. The FinTech companies have started to develop education remittance service using digital money, and immigrants use the service to transfer their tuition directly to the school. Lastly, promoting gender equality. It is really important. It gives women greater opportunity to work remotely from their homes, or open opportunity for women to replace their unpaid work hours with paid work. Again, certainly there are many types of financial innovation. As I would like to touch, our panelists will more deeply touch on it, hopefully. There are certain types of financial innovation: product innovation, process innovation, and risk-shifting innovation. We confronted with financial innovation, a regulator can take one of the three approaches usually, whether we restrict or ban product or process in terms of innovation, or we take or wait and see, it is watchful approach, or actively facilitate and regulate the product and services because its potential economic and social benefit. There is a question whether we observe or ban or move forward. The second of all, there is many standard-setting bodies have also issued guidelines and standards for the financial sector that are relevant for FinTech, like Basel Committee's core principles are relevant for assessing innovation in banking and the interaction between banks and FinTech firms. The IS core objectives and principles are relevant for application for FinTech in securities market. The IAIS insurance core principles are relevant for the range of FinTech applications in insurance, InsurTech. So then there is the question, what are the next steps and key questions on it? Thank you very much for the attention.
Thank you very much, Dr. Davasuran. I think this sets up us very well for the discussion. And it's interesting to see the connection, also like going back to economics theory between inclusion and innovation and the results you have achieved in Mongolia. Let me ask one quick question as a follow-up, and that is on the gender gap. So I was really impressed to see and to hear from you that there's a gender gap of, I think, 0.3 percentage points in Mongolia, and we have heard about some examples in other countries where this is much higher. What do you think as a regulator is there a role for the regulator? Have you played a role in achieving this, or do you think other determinants are more important?
Thank you for the question. Actually, last year this time, I also answered this question. Why Mongolia has such a high no gender gap. And so it is pretty much based on my own observation. Actually, we do have nomadic history, nomadic culture, and nomadic lifestyle. And Mongolians have inherited this culture and lifestyle. So this culture defines household members' responsibility, who do what, and their daily chores. Basically, our ancestors, they usually, men, travel away from home for a long period of time, taking care of their livestock. During his absence, women take care of day-to-day activities, manage everything, and they take care of their children. So, which gives, for Mongolian women, more opportunities to be independent, to be more decisive, and also the leading role in the family, on the one hand. And second of all, Mongolia is the first country in Asia ratified the constitution granting women the right to vote, and back in 1924. Mongolia is the second socialist country in the world after Russia. So during this 70 years of socialist regime, all the girls and the boys goes to the school, they're adopted very good education. This becomes another good source for the gender equality, I think. And then, if you see the recent statistics, employment status for women is 60% of the civil servants are women, 70% of the financial industries are women, 80% of educational industry, they are women, 90% of the health sector employees are women. So it basically says, yes, gender, I'm now, see that in terms of financial inclusion, it is around 95%.
Yes, that's very impressive, and I think there's a study to do by our colleagues from FinTech to look at correlations between pastoralist societies, employment, and constitutional rights to vote among women, and whether there's any correlation with financial inclusion. Maybe that's important determinants. Let me move on to Mr. Chen Liming from Ant Financial. He's a senior vice president with Ant Financial and a member of the Globalization Steering Committee, and I also learned he's the legal counsel. So that is also very interesting for us because he has to do with compliance, so he knows a lot about that. He had brought a few slides to show the story of Ant Financial. Unfortunately, we don't have time for that, so we agreed that he would talk through some of the results and some of the insights. But I'd be very curious to hear also from you your experience with dealing with regulations, whether you have perceived that as a bottleneck or whether you have find creative ways to deal with it, whether you had what kind of exchange you had with the regulator, and maybe also how Ant Financial has led to regulatory changes by coming up with innovative ways how to manage risks. Thank you.
Thank you, Stefan. and financial itself obviously has been at the forefront of digital financial services, financial inclusion journey. Our primary business is Alipay. I think most people would have heard about it. Over the sort of from the day Alipay was established in 2004, our mission has been to bring small changes to small people, really to allow them to benefit from digital financial inclusion. Throughout the years, we obviously have benefited from the policies of Bank of PBOC, the financial regulator in China, and to allow us to grow, to allow us to innovate. I think, given the time constraint, I think I can sort of share some of the highlights of the innovation that we have sort of experienced in China. Hopefully that sheds some light on how we sort of look at the balance between innovation and managing risks inherent in delivery of financial services. Number of sort of products that we offer obviously had financial inclusion in mind. In China, we serve 520 million users, and with our joint venture partners in a number of Southeast Asia countries, we serve 870 million users globally. With that kind of number, the products and services to be offered obviously need to be sort of addressing the consumer daily needs. Couple examples. One is the money market fund we established in 2013 and developed in 2014, which is a very unique wealth management product for consumers with sort of pocket changes. Now over the number of years, we have served 300 million users, including 100 million investors in rural areas. And the fund could be subscribed as low as 1 RMB, which is about 15 cents. Average account now is less than 4,000 RMB, which is about 584 US dollars. Over the years, we have created a value appreciation of 150 billion RMB, equivalent of 22 billion US dollars for investors. And those are very small amounts collectively for users. We have the size of this money market fund now is 1.7 trillion RMB, which is equivalent of 248 billion US dollars, by far the largest money market fund in the world. And the technology that we rely on allows us to sort of monitor the liquidity risk and associate other risks. And we the user experience is extremely friendly with T+0 sort of a withdrawal and daily interest income notification every day for users to bring sort of a joy to their lives. The second is sort of a product I would like to, from innovation perspective, I would like to focus on really is the digital lending for SMEs. That is a product we developed together with Alibaba's e-commerce platform to serve the small and medium enterprise merchants on Alibaba's e-commerce platform. And over the years, we, as of end of March this year, we have served 15 million SME players, the merchants, and over 200 million of them are rural merchants, basically from countryside, and with 1 trillion RMB loans extended. That's sort of a number equivalent of 146 billion US dollars. And the average loan is about 10,000 RMB, about 1,460 US dollars. And they're short duration and very much capital loan, sort of inventory turnover type of funding for SMEs, the type of fundings that the traditional financial institutions are not in a position to be able to offer. And those sort of products really is relied on our robust sort of technology-driven credit assessment process and the live sort of risk management process to lower the cost and increase the efficiency of the delivery of financial products to the needy, particularly in the sort of unbanked and underbanked segment.
Thank you very much. I think it's always mind-boggling to hear about these numbers, but obviously China has also, give it a round of applause for you. China is, population is bigger than any other, but still I think what's interesting to hear is how you have also been reaching out in other markets in Southeast Asia, and how you have combined different products. And I would have many more questions for you on the e-commerce side and how you combine that with financial services. But maybe let's move on to the next panelist, and we might get back to that later. So let me ask Mr. Vladimir Tamoshnikov to talk next. He works with CBR as a director in the Financial Markets Strategic Development Department. We've heard quite a bit about the Russian, from the Russian Central Bank today. I'd be very interested to hear from you about the practical challenges in actually keeping up with changes, innovations in the market. And we have heard from the first deputy governor, we have heard about legal changes in the pipeline, but we have also heard about a sandbox approach. So I'm wondering, from your perspective, what is the best response? Is it a mix of different approaches from the regulator side? And do you all have to become blockchain experts, or what does it mean also for an institution like CBR to actually keep up with those developments?
Yeah, thank you very much, Stefan. Very good questions. I would start with the overall context. I believe Russia as a country is now in a good position to promote financial inclusion through innovation. First, we have a quite strong technological starting point. We have a quite high smartphone coverage, we have high internet coverage, we have quite developed technological infrastructure, and we have highly qualified IT staff. Second, we have quite a good potential for the financial inclusion. It was a research performed last year by the Ernst & Young, and they placed Russia among the top 10 countries with the greatest potential revenues from financial inclusion. They estimated it for about $5 billion annually. And the third, last but not least, we have a strong commitment to our goals. So we have financial inclusion is one of the 4 components of our development mandate. We have along with competition, market integrity, and financial stability. We have separate strategy on financial inclusion, in which we identify 4 different types of barriers we are going to work with. There's physical barriers, there's mental barriers, including financial literacy, affordability barriers, and the range of financial products. And for each type of the barriers, we see some very important milestones stemming from the digitalization, some sort of breakthrough technologies. And let me give you a couple of examples. For example, we see an automatic algorithms services could be much more cheaper than the services, individual services provided by the highly qualified staff. Robo-advice could solve the problem of the price of the asset management. But even more potential we see in automatic financial assistants who helping individuals in making financial decisions and financial planning. I mean some bots who live in the device of the individual and who are based on artificial intelligence market learning, and they are playing on the individual side, not on the financial organization side. And we believe that could trigger an actual revolution in solving the problem of financial literacy. This is an eternal problem, and this solution could come from unexpected side, actually. I mean, bots, they could live on your device, they could learn from your experience, they learn your habits, they learn your preferences to better assist you, and maybe later on they will behave with your personal features. But once again, the artificial intelligence pose there are big questions for the regulator. First is the central questions for every regulator is the responsibility. Who is responsible if something goes wrong? And second is that how could we provide that such a complex structure and self-development mechanism would not damage person? How we can protect the customers here? We have a huge potential in the remote identification and the biometrics to solve the problem of physical barriers for the people. But once again, this is a whole ecosystem, not only financial sphere. We have players there who are the third-party providers, like device manufacturers, like vendors, and they are basically out of the scope of the regulator. So we need to find new effective ways how to provide the customer protection in this particular field. We see a great potential also in the new credit scoring models, because you can receive, based on big data and artificial learning, machine learning, you can provide much more exact pricing for individual risk. But again, there's technologies could lead actually to financial exclusion, because first some groups who are less who has a low credit worthiness, they could be excluded because their risk now is priced fairly. Yeah, of course, some would believe it's fair, but anyway, the social aspect of this is to be discussed. The second is that such mechanism could unintentionally discriminate some people who are not less willing to share their information online. So if you do not provide the information, you are the black box for the system, and that they put you to the lowest quantile according to the risk, and they provide the highest pricing. So how we are working with the development, how we are working with the financial inclusion, I would say we work on different levels. First is the market-wide level. We concentrate our efforts on building the financial infrastructure and providing the competitive access to it. There are a lot of examples, like Olga already mentioned, like fast payment system, uniform authentication system, digital identity. We have also now the project of marketplace ongoing, which aims at creating an Uber type of platform connected to financial producers and digital ecosystem around it. And the regulator plays an active role in this. And on the micro level, we have a sandbox launched last year, which helps us to test some innovative ideas and to provide some exemptions and to make them fly. And of course, I think to sum it up, I would say that we are quite good, and not only Bank of Russia as a regulator, but the whole regulatory environment in the world. I think we are quite good, quite nicely prepared for the tactics for the short term. And the path for the regulator here is quite clear. We need to switch to the partnership type of cooperation with the industry, and we need to work in regulation on those 4 identified enablers Stefan described in his article. But for the strategy, the mid and long term, actually, I think it has much more uncertainties for us. Thank you very much.
Thanks very much, Vladimir. I can hear that you have a very systematic approach in Russia. What strikes me is that you see great potential in those innovations, but you also see the risk, which you just stressed. You know, there's some risks, and this is coupled with a strong focus on financial education and literacy, which I think CBI has been very active in over the years as far as I've followed it. So I think that's a good combination, useful combination. Let me introduce the next speaker, Mr. John Wakab. He's the CEO of the SACCO Regulatory Authority, which is a specialized regulatory authority for the savings and credit cooperative sector in Kenya. And I'd be curious to hear from you, from the Kenyan experience and also from the experience of a sector which is kind of, it's close to financial inclusion by definition. Those SACCOs are typically reaching the lower end of the market. So how are you affected by innovation? How is the sector affected by innovation? Does it change your role as a regulator towards the SACCOs? And how do you keep up?
Thank you very much, Stefan, for having me here. And one of the concerns I think that has always been raised by service providers, particularly fintechs, in terms of providing services to financial institutions in Kenya has always been that the regulators normally stand on the way in terms of providing innovation by these providers. But I think that may not entirely be true, that regulators would stand on the way of innovation. So what I would want just to do is to share my thoughts on innovation from our perspective, or rather innovation from regulators' side, and what we do to provide an enabling environment for the fintechs within the financial sector space in Kenya to be able to be innovative as they provide their service to the financial cooperatives for that matter. But first, the financial cooperative sector in Kenya is relatively small in terms of the volumes of the financial services that they provide to the population. But in terms of social impact, it's really large. And so what the SACCO Society's Regulatory Authority has been able to do since its inception about 8 years ago is that the framework itself, the prudential regulatory framework that it implements actually is tailored towards addressing specific industry challenges. And this is the financial, the cooperative financial services industry that we operate in. And therefore, in terms of providing an enabling environment for the fintechs within that space to be able to innovate for the purpose of assisting the financial cooperatives to grow, then it is that framework that regulates that area has really been specifically tailor-made to meet those challenges within that area. The second thing that the framework that we implement in terms of prudential regulations that we implement for the financial service sector is that it establishes what we normally refer to as the fintech bridges. And these are the bilateral cooperations that we seek to establish between the regulator and the fintechs that are playing within that space. so that then they can be able to fully understand the sector that they are dealing with, because we are not a banking sector per se, but we are quasi-banking sector, so to speak. The other thing that we do is to adopt what we call a blank sheet approach. These are just simplified rules that are provided. For instance, the savings and credit cooperatives in Kenya, they are in two categories. We have those that are regulated prudentially by the prudential regulatory framework that we do have, and there are those that are not regulated under that framework, but they are simply just licensed by the Commissioner for Cooperatives, and therefore there are no stringent rules that are required for them. Until then, we have observed they have reached a certain level where they can be brought on board to be prudentially regulated. The other thing that as a regulator we've been able to do is to work together with the industry, so that we do understand as a regulator that the SACCOs and the financial cooperatives in that space understand the business much better than the regulator. And so for us to be able to be in tandem, and in most cases be ahead of them, we need to work with them so that we can understand some of the challenges that they have, so that when we are approving products that are supposed now to be provided by the FinTechs, then we are able to understand them much better, and so we are able to approve appropriate products that are able now to have the organization grow. And again, I know it's already been mentioned about the regulatory sandboxes, and this is an approach actually that we have adopted in that we do test and just learn approach. That for us to come in the industry, we found already a sector that was operating, that the SACCOs and the financial cooperatives had been in existence for over 50, 60 years. But there were no prudential regulations in place. And therefore, they had already been able to operate, provide services, and now regulations are made for them to be able now to work within a framework so that then the members, or rather the customers and clients, are protected. Collaboration among regulators. We've got a very strong relationship between the financial regulators within the Kenyan market. So that then we can be able to see, because we are seeing convergence of services that the financial providers within our industry, within our market are providing. The capital markets, we're looking at the insurance sector, looking at the pension sector, and now the SACCO sector, together with the central bank. We have a relationship where we share information so that then we do not have a situation where we have regulatory arbitrage existing. What are some of the elements that are needed to spur innovation that we think from our perspectives are critical? One of them is very close coordination among key players so that we can gain what we call equal understanding among regulators. We do coordinate. We want to understand, because we are seeing that convergence. We are seeing financial cooperatives getting into the insurance industry. They are within the capital markets. They want to roll out certain products that require to be approved by the capital market and so forth. And therefore, that coordination among the regulators, just to understand the industry in which each one of the regulators is really regulating, becomes critical in order to provide an enabling environment for these organizations to be able to move. And of course, I think it's been mentioned about the smart policies that ensure enabling environment for innovation going forward. Unlike probably other regulators, the SACCO regulator plays a critical role in terms of capacity building, capacity development by the players within that industry, because we believe that they need to really understand and interpret the legal framework that is existing in a more understanding way, so that they can be able to effectively implement the same in their businesses. Then how does innovation interact with traditional services? You know, innovation has come and already found that financial services are being provided. So we want to believe that the traditional financial service provision mechanism becomes now the foundation upon which we can be able to build innovation going forward. And how do we set the right balance? Because that is critical, as I just conclude my remarks, is that we need to insist on checks and balances between the innovation in the industry and ensuring safety and stability of the sector going forward. Otherwise, thank you very much.
Thanks very much, John. I think it's very interesting, and I guess if you would go back 10 years to the first GPF, we would have heard different terminology. But if I listen to you, I hear a lot of mentioning of collaboration, partnership, FinTech bridges, you know, for mutual learning. So I think what I can see is much more openness and acknowledgement also on the regulator side, and I think it affects us all that the sector has been moving in such fast speed and developing through FinTech technologies that it's hard to keep up, but we are all challenged on the same level. Let me ask, last but not least, James Bonanna to say a few words. He is the Group Head of Sales and Access at Letsego, which is a Pan-African network. And what I find very interesting what I would be very interested to hear from you is that you have the experience working in 11 markets, 11 different markets in Africa. So you have, you know, by definition, you have to interact and learn about different regulatory approaches and how to deal with that. So I'd be very interested to hear from you how to deal with that and how you actually approach regulations in different markets and go about them. Thank you.
Thank you, Stefan, and good evening. I'm cognizant that I suspect I'm the one holding everybody up from a gala dinner, but it's been a stimulating conversation. And first of all, you got our name right, and it is Letseho. It is written Let She Go, but pronounced Letseho. So well done on that. So a little bit of background around who Letseho is. This is our 20th year of operation. We were birthed out of a financial inclusion need, a very small and modest one, but a financial inclusive need all the same. In our home market, Botswana, 20 years ago, there was a certain niche of clients who were unable to access credit from the formal financial services industry, and our founders put together a little bit of capital and started offering microloans on a very sort of manual basis. It was staggering the response they got. Listening to some of the founder, managers who were there at the time, talking about people queuing up, for these loans to apply for loans as early as 4 or 5 o'clock in the morning, and they were very small amounts as well. So that was our initial business model. Targeting that segment, we were able to propagate that model into a multitude of markets, primarily targeting the government worker segment on a deduction at source basis. In 2014, we acquired a microfinance business that had a footprint in 5 countries in East Africa to provide a little bit of diversification. But essentially, our business model has had a very, should I say, non-digital element about it. So it's speaking to clients who typically have not been served, or those who would be new to us, would be interacting with a formal financial services institution for the first time. And our challenge has been, in the wake of all the proliferation of digital mediums, how do we then allow our business model to take more of a DFS approach? And 2018 is a landmark year for us because we have successfully implemented 2 milestone innovations in our mind. One in Ghana that the Deputy Governor mentioned. In Ghana, we trade currently as AFB, but shortly rebranding to Letseho. And we also just signed, I think last week, another deal with an Airtel in Tanzania. In these instances, what we've done is we are the financial partner, basically providing our license and capability into digital ecosystems in the mobile money space. initially with loan offerings, but we're going to be broadening that to include deposit taking and deepen that with insurance, etc. So yes, Stefan, we have, within the 11-country footprint that we are in Africa, had experiences from a regulatory standpoint in terms of pushing an agenda around innovation. And by and large, our experience has been a very positive one. So let me get into the specifics of some of our experiences. About a year and a half ago, we engaged the regulator in Mozambique, Central Bank of Mozambique, on our agency banking solution. We brand Blue Box, partly funded by GIZ and the MasterCard Foundation. And the regulator and us, we actually went to the field and demonstrated how the process worked, how the technology worked, what the customer experience and journeys were, and got a lot of support and approval from them as far as that element is concerned. So a real example of, a sandbox, roll up your sleeves, let's go to the market and understand how that works, a real positive. And they have continued to walk that journey with us. Agency is heavy lifting, but we recognize the importance of it. And I think, as has been spoken to earlier, unless you're able to take care of both sides of the equation, as far as enabling the payment transaction is concerned from a digital standpoint, you will not make headway. So in our part of our evolution of our business model is a recognition that we cannot just be credit-led. We have to get into other streams to really allow for the inclusive finance agenda that we hold dear to our hearts and also to our commercial model to get that embedded. So a real example there of sandbox, test and learn support that we've gotten from the regulator in that example. The second one I've kind of already touched, and Deputy Governor of Ghana also spoke about, which is the approval in terms of the partnerships with mobile money players to be the financial services partner that really allows for a diversity of propositions beyond just the generic vanilla mobile money wallet value proposition. And we have quite a pipeline as far as that piece is concerned. The third one may not seem as obvious, but I think if I may draw on some definitions that came across from Dr. Devasuren around what are you innovating specifically? Is it the value proposition or process innovation? For us, rationalization of our platforms, meaning having a centralized data center and being in multiple jurisdictions, has also required for us to be able to then innovate and be able to provide flexible solutions to our customers, has meant then that we've had to, in some instances, almost push the boundary of some of the regulation around on-soil processing capacity or capability in those jurisdictions, and balancing that with the need for a centralized data center to house your technology platforms. What that then leads me to is, I think, a couple of points I'd like to close out my submission to you all this evening, in where I see issues or where I see work, where I see an evolution of where areas are going to be a bit gray, because you don't know what you don't know. One, I think, is really very much on the reg tech side of things. It's becoming clearer that with all the evolutions in technology, there is now a segmentation of specialisms in terms of how you go to market and the platforms that you're going to use to interface with your customers. I'm not an IT person by any stretch of the imagination, so forgive me if maybe I don't speak as elaborately about some of these things, but I can begin to see the picture emerging. So one, there's all this discussion around hosting platforms on the cloud. Is it through Microsoft? If it's through Amazon? What are the regulatory issues around that? And that is just where you host the platform. The other thing is some of the software services that you would then need to have would then need to be hosted in those platforms. Again, testing and pushing boundaries around regulation on on-soil processing. It's very clear that I think for a financial services player such as ourselves to be nimble and ready for the future, the traditional core banking system models that we've adopted and that whole infrastructure is really being tested because a lot of them are unable to host the wallets or have the capabilities required for data analytics, some of the instant payment capabilities that are required. And, you know, you're going to have basically a cloud infrastructure with a whole bouquet of services and service providers fitting into that cloud infrastructure. So how does the regulation, you know, from different country standpoints allow a player such as us who are sitting in 11 different jurisdictions to have one sort of centralized processing capability that serves all these different markets, but then potentially goes against some of the restrictions or concerns about, as I said, on-soil processing. So I think we see that that's going to be an interesting conversation. I think it's clear to me from everything that I've heard from all the regulators who have spoken that there is an awareness of how quickly things are evolving. There was a very interesting depiction of you know, blockchain and the regulatory stance that was suggested by the Deputy Governor of Bank of Zimbabwe, which I thought was quite apt and probably didn't speak just to blockchain, but the whole platform configuration issue. The second thing that I'd like to also share here is the commercialization aspect, and it kind of draws from the RegTech issues that I spoke about. Because of all the different parties who are involved, the commercial models are taking a very different shape and size. In the past, it was one service provider you'd go to, they'd give you some software, some hardware, you'd pay them you know, some capex and a maintenance cost. In some instances, you're going after a marketplace, you don't know what the commercial viability is, and both parties are willing to put skin in the game and share on the profits. How do you structure a commercial of that instance? In a lot of our jurisdictions, as we go out with new products to the market, we have to have a tariff structure. And sometimes, you know, you literally are taking a punt in terms of determining what the demand elasticity for that particular product is going to be, and having to recognize that there's another partner or partners who are looking to share potentially in the success or failure thereof. So that whole piece around how the proposition is structured, what is its tariff, also is going to be a very, I think, a point that's going to require a lot of innovation in terms of not only formulation, but also in terms of review from a regulatory standpoint. And just leading up to that, and my final point is, one of the challenges I think you could potentially see, or challenges especially of being successful, is then taking a leadership position in a marketplace and having to be very careful how you tread with that so that you don't seem to be in an antitrust or monopolistic situation where you're cornering the market, determining what the market prices are, if it's in an oligopolistic position, not being seen to be, you know, price fixing and all those kind of things. So I can see in the future, these are all issues that are going to have to be looked at with a new microscope, with a new sense of sensitivity. But I certainly get the sense that that is the spirit within which a lot of these initiatives are being done. Thank you.
Thank you, James. I think you touched on so many things. I won't even try to summarize anything of that. But what I like is, you know, you mentioned a few issues which also we at SIGAM think about. It's something to look more deeply into. And one is cloud hosting and what kind of regulations exist around those. But also new partnership models. You kind of have a modularization of the value chain. And from what I sense from you is, you know, in some cases you have partnerships with licensed financial institutions, and others you have, in other markets you have a bank license. So it really depends on how you fit into that regulatory framework. I'm told time is up. I had really hoped to give you the opportunity to ask one or two questions, but time was working against us today. But I think we should get special applause from you at the end that we are the only session which didn't even take the full 1 hour. So my time says 55 minutes. just as final word, what I take away from this is also, you know, regulators and providers are already talking a lot to each other. We are mutually learning. I think AFI is a great forum for this kind of exchange. So I can just encourage everybody to continue the discussions over dinner. And thanks so much for your patience and staying on until this very late hour. Thank you very much.
Ladies and gentlemen, while the panelists stay on stage for a final group photo, let's give a round of applause as well for our moderator for this session. Thank you, ladies and gentlemen. That concludes day one here at the forum, and we thank you sincerely for your patience and your attention. Of course, we invite you to move now to the buses that will be leaving very shortly. And I just want to let you know that at 8 o'clock, 8 p.m. is when the gala dinner that's hosted by the Bank of Russia will commence. So the bus service from the various hotels will begin between 7:30 to around 7:45. We'll see how well we can prepare ourselves to move. But of course, the buses will start departing from 7:30 from your various hotels. Once again, we thank you for your attention, and please, ladies and gentlemen, our program begins tomorrow at 9 a.m. and we look forward to seeing you all here tomorrow morning. Thank you so much.